And Tom, what do you make of the selling in technology names that we've seen over now the past 2 days? How far does this go?
Well, first of all, thanks for having me on. And clearly the last 2 days, yes, we've seen a lot of selling in technology, and I don't think that it anchors in one specific reason. Sometimes you look at the fact that after a long run, and as you head into the end of the quarter, people are going to take profits, especially after such a strong run. We're more focused at Barings really relative to, what's the more medium and longer term impact of what we're going through with the pandemic and its economic effects at the end of the day.
I'd love to hear the answer to that. I'm not sure anybody knows what the medium and long-term impact is going to be that we're going through as a result of the pandemic and the changes to the economy. What's the view at Barings? How are you positioning?
Well, I think what you have to look at is for us, we're not going in and out of markets. We have to manage institutional money through the cycle. So a lot of what you have to look at is where is quality across fixed income, equity and real estate markets, and versus where we're going to see, frankly, more concern. We think defaults that have risen still have a ways to go. So we have to think about those industries that may have permanent damage from the pandemic versus those that, the equity market has seen those that, have had a good run because they've been helped by the pandemic and the change in consumer behavior, the change in some businesses. But you still have to focus on a lot of businesses that have to adjust their business models. So as a result, you can look at these numbers we're seeing today, dramatic improvement in unemployment off a big drop at the beginning of the year. But as we look forward into the next 6, 12, 18 months, that rate of improvement is unsustainable. What's it going to look like when economies start to come back once we arrest the virus? And you just have to focus on the fundamentals at that point.
Of the fundamentals is because the sharp sell-off that we saw yesterday across all the major averages was repeatedly called a reckoning, a justification. But based on the continued sell-off that we're seeing in the NASDAQ this morning, it's as if the market feels like there's still more justification that's needed for valuation. So where do you see fair value for the NASDAQ? Where will it go?
Well, I'm not an equity expert per se, so I don't think I can give you a fair value of the NASDAQ. I look at it simply from a perspective of, the valuations, the market was very, very high. It makes people uncomfortable. How can you sustain such a high valuation when there's other noise ahead of you? So where the bottom is, I think I'll leave that to the equity experts. I just look at the fundamentals of, what are companies doing? There are probably a lot of companies that weren't growth companies in the value space that actually are showing improved earnings that may catch a bid, if you will, at the latter part of the year.